Hello. Today we'll be discussing two topics of current affairs. First is the effect of oil prices on the economy, and then the de-dollarization. We'll be discussing these topics in the form of two questions. The first question is, what is the impact of crude oil prices on the economy? Crude oil prices have a substantial impact on the Indian economy, as India is one of the largest importers of the crude oil. Since India imports about 80% of its crude oil needs, fluctuation in oil prices affect multiple economic areas like inflation, the fiscal deficit, and currency value. The key impact of these is discussed in the forthcoming slides. First, the inflation and consumer prices. Higher crude prices increase transportation and manufacturing costs, thus contributing to the inflation. Fuel is significant component of the wholesale price index and the consumer price index in India. When crude prices rose sharply in 2022, I'll be giving the example of 2022 only because there was a sharp increase in the oil prices in that year. So when crude prices increased sharply in 2022, reaching about $120 per barrel in June that year, the impact was seen in India's CPI inflation, which surged to 7.79% in April 2022, its highest in 8 years. Rising fuel prices contribute directly to the cost of goods and services, affecting overall consumer spending. Trade and current account deficit. Rising crude prices widen India's crude and current account deficit as country has to spend more on imports. For example, in financial year 22, India's crude import bills reached $190 billion, up from $82 billion in financial year 2021. This was all due to the high global oil prices. This increase contributes significantly to the record high deficit of $192 billion in financial year 2022. The current account deficit, which measures the country's trade balance along with the net earnings from international investment, was projected to be around 2.8% of GDP in financial year 2022, up from 0.9% in financial year 21. Fiscal deficit. India's fiscal deficit, the gap between the government expenditure and the revenue, is also affected by rising crude prices. What happens is the government often intervenes to moderate domestic fuel prices through subsidies or by reducing excise duties, which impact the fiscal revenues. In May 22, the government cut excise duty on petrol and diesel to ease inflationary pressures, costing the exchequer an estimated of 1 trillion rupees, thereby widening the fiscal deficit. High crude prices necessitate greater spending on fuel subsidies, particularly for sectors like the agriculture and transport, which rely heavily on diesel. Increased subsidies strain the fiscal budget, limiting the funds availability for the other development projects. So the development also gets affected. Foreign exchange reserves and the currency value. Demand for foreign exchange. High crude prices increase the demand for foreign exchange to pay for the imports, putting pressure on the rupee. As oil price surged in 2022, the rupee fell to an all-time low of around 82 rupees per dollar in October 2022. This depreciation further raised the cost of imports and reduced India's foreign exchange reserves, which dropped by nearly $100 billion from its peak of $642 billion in September 21 to around $542 billion in October 22. Corporate profitability and economic growth. Sectors depend on fuel, such as the transportation, airlines, and manufacturing, see increased operational costs when the crude prices increase. This reduces corporate profitability and thus can lead to higher consumer prices for goods and services. Additionally, elevated oil prices slow down economic growth as companies and consumers reduce spending in response to the higher fuel prices. Reserve Bank of India's economic forecast for the financial year 2022 was revised downward, partially due to the inflationary effect of the high crude prices that year. So, overall, rising crude oil prices present a significant challenge to the Indian economy by affecting inflation, trade deficits, fiscal health, currency value, and growth. With India's high reliance on crude imports, with India's high reliance on crude oil imports, global oil prices continue to be major detriment to the country's economic stability and fiscal policy choices. To manage these challenges, India has been exploring options to diversify energy sources, promote renewable energy, and create strategic oil reserves. Second question. Global economy is seeing a phenomena of de-dollarization. What is de-dollarization? What are the underlying factors driving the trend? In the context of India, what to address the challenges posed by de-dollarization? Now we'll be answering this question in these parts. First is the global shift from US dollar dependence. What's driving de-dollarization? Challenges and opportunity for India in a de-dollarized world. Strategies for India to navigate de-dollarization. De-dollarization is a trend of reducing reliance on US dollar in global trade, finance, and reserves management. Now, people generally forget about this reserves management. Countries are increasingly shifting to alternate currencies for transactions such as euro, yuan, and even the digital currencies, aiming to lessen vulnerabilities linked with the dollar's dominance. This move reflects a desire to diversify currency use, reduce dependency, and foster economic resilience. What's driving de-dollarization? Trains, particularly US-led sanctions, have motivated countries like Russia and China to turn away from the dollar. By reducing dollar dependence, these nations aim to protect their economies from external policy linked risk. Economic diversification and risk mitigation. Holding reserves in multiple currencies help to manage risk associated with dollar fluctuations. A more diverse currency reserve protects against potential dollar depreciation, which could disrupt trade and affect investment. Rise of alternate economies and payment systems. As non Western economies grow, they contribute to reshaping the global financial landscape. Systems like China's cross border interbank payment system, CIPS, allows international transactions that bypass dollar based system, providing new transaction pathways. Advancements in digital currencies. With the rise of central bank digital currencies, CBDC, countries are developing digital currencies alternatives to the dollar. For example, China's digital yuan has been promoted for cross border use as a direct alternative to the dollar. US monetary policy and inflation concerns. Fluctuation in US interest rates impact global markets due to the dollar's influence. Diversifying away from the dollar helps countries reduce their exposure to these shifts, mainly maintaining greater economic control. Challenges and opportunities for India in the de-dollarized world. India faces both challenges and opportunities amid this shift. Reducing dependence on dollar could help stabilize the economy by lowering exposure to currency volatility. However, India imports much of its oil in dollars. So dollar fluctuation directly impacts trade balance and inflation. Increased trades with countries under ban improves exports. Strategies for India to navigate de-dollarization. Bilateral trade agreements in local currencies. Expanding trade in local currencies, especially with the partners like Russia and Asian nations, can reduce dollar dependence. India's recent rupee ruble trade agreement with Russia is a step towards this goal. Diversifying foreign exchange reserves. India could diversify its reserves by holding more euros, yen, and yuan. While exploring safe digital assets, this approach would provide resilience against the dollar volatility and reduce reliance on single currency. Promoting rupee in international transactions. India can advocate for rupee based trade, particularly with neighbors and the regional partners in South Asia and the Gulf Cooperation Council (GCC). This expansion of rupee transactions could strengthen the currency and enhance its international standing. Strengthening domestic financial markets. A stronger domestic financial market reduces reliance on dollar dominated borrowings. By boosting the local bond market, attracting more foreign direct investment, and enhancing local fundraising, India can reduce its dollar dependency. Explore a digital rupee. The Reserve Bank of India's work on the digital rupee offers a potential for cross border transactions without the dollar. This digital currency could cut transaction costs, improve transparency, and position India as an innovator in global finance. Building strategic reserves and non-dollar oil trade. India can build strategic reserves of essential imports and explore non-dollar oil trade with partners. This strategy would provide a buffer against the dollar-linked price surges, especially in the energy market, reducing the reliance on dollar for crucial imports. So, by implementing these measures, India can turn the challenges of de-dollarization into growth opportunities, strengthening its economic resilience and contributing to more balanced multipolar global financial system. Proactively diversifying its currency exposure would allow India to navigate a shifting economic landscape with confidence while reducing the vulnerabilities associated with the dollar dependence. So, we'll be discussing more of these current affair topics. Thank you as of now.